Welcome back. You're watching Prime Property. After integrated large format developments, Mumbai-based real estate major Mahindra Lifespaces has added another housing segment to its bouquet: affordable housing. Mars Vigilani looks at the $150 billion opportunity that the Mahindra Group is eyeing.
The $16.5 billion Mahindra Group is sensing opportunity in the affordable housing market. It is now venturing into affordable housing under its real estate and infrastructure development arm, Mahindra Lifescape Developers.
We are undertaking this project at a time when the new Prime Minister has announced his grand vision, and dare I say the grandest of the many broad visions he's set out, and that is that every family in India should have a home.
Under its new brand Happy Nest, Mahindra Lifespaces will launch 2 affordable housing projects next quarter, one in Avdi in Chennai and one in Boisar on the outskirts of Mumbai. While Chennai project will be spread across 13 acres of land, Boisar will be on a 15-acre land plot. Each unit in the 350 to 650 square feet range will be priced between 10 lakh and 20 lakh rupees and will cater to families with a combined income of 20,000 to 40,000 rupees per month. But Mahindras are late to the affordable housing bandwagon. Players like Tata Housing, S. Raheja Realty, Podar Housing, to name a few, are already enjoying the first mover advantage in this segment. Tata Housing's 1 BHK apartment in project Shubhagriha with an area of 465 square feet is pegged at 16 lakhs. S. Raheja's Raheja Prime is selling apartments between 400 and 650 square feet and 20 lakhs, just in line with those apartments by Podar Housing. But it's not just the top developers who are entering this segment. Local developers like Swastik, Viva Group, Oswal Realty, etc. dominate the market. And why not? Since the appreciation since 2009 has been substantial. A classic example being Tata Housing's Nano Housing project that launched 5 years ago at a launch price of about 4 lakhs in 2009 is now selling similar housing projects priced around 16 lakhs per flat. But Anand Mahindra says there's always room for companies that come in meaning business.
The fact is, it's a $150 billion opportunity for private enterprise, and that's the only point I want to make today, is that it is what we call shared value projects such as these. Shared value simply means that you can do well but do good at the same time. So it's not CSR. This is not being driven only by purpose without profit.
The term affordable is a very loosely used word in India. But Mahindras have not only worked out their math as far as these 2 projects go, but they also have laid down 3-point plan to make sure they remain affordable in the true sense.
To reduce costs, we need to have a lot of prefabricated material ready to fit in, like a manufacturing line. You get assembly and you do that. We need to get it fast. The second thing we are doing is that we're looking at places which have connectivity and land prices have not gone up very high. And the third thing that we are doing is that we are making finance available to those people, because this class of people, unlike most of us, doesn't know the banking system so well.
Construction is yet to start, but the company says its land bank is ready, as are the tie-ups for home finance.
Mahindra Finance would be a significant partner for both these projects. The other people who have tied up with us are the State Bank of India. There is Muthoot Home Finance. In Bombay, we will have MHFC also being a partner. So really people who are used to lending to the informal sector, plus the larger nationalized banks like SBI.
For Mahindra Lifespaces, it does not just end with affordable housing. The Chennai and Mumbai projects will form the foundation for company's contribution to Prime Minister's plans to build 100 smart new cities across the country.
I think smart cities means smart planning. So we have learnt from these 2 cities, and we would enjoy being think tanks and supporters to the government in building those smart cities.
But all stakeholders need to be in sync, says the chairman, and urges state authorities to take off pressures the developers are reeling under for a long time.
The broad agenda and the ambitions they have will be achieved by enabling shared value projects like this. That's how you will get inclusion. When you can create sustainable, scalable, replicable projects like this which attract private entrepreneurs. And therefore, all we are asking for is the enabling environment. Allow us to execute these projects swiftly, to get our clearances swiftly and transparently.
Now, many developers have had to jack up prices in the affordable housing segment just to make their ends meet. But Mahendra says that will not happen here. In fact, he's confident that if done right, the overall affordable housing segment will give you returns exceeding the other conventional real estate segments. In Mumbai, Manasvi Gilani.
Chennai is one of the cities the Mahindra Group is planning to begin its foray into affordable housing. My colleague Purnima Murli reports the city of late has seen a trend of affordable homes being sold in the range of 10 to 25 lakh rupees.
This is Avadi, a Chennai suburb where affordable homes ranging between 10 and 25 lakhs are coming up. Premium builders like Mahindra Lifespace and VGN developers are now making Avadi a new hub for affordable housing. And that's because of this suburb's proximity to Chennai's large industrial zone of IT companies and automakers. Builders are now betting big on employees of companies in the industrial zone of Ambattur that houses companies like TCS, TVS Motors, HCL Technologies and Dell. Property developers in Chennai over the last few years had started focusing on luxury housing. So much so, CBRE wrote earlier this week in an article, and I quote, "A conservative market like Chennai is likely to witness about 1,500 units of ultra-luxury homes budgeted between 5 and 20 crore rupees within the next 12 months. This is because most developers aspire to a piece of the premium development pie in their portfolio for raising their brand value. In addition, profit per apartment is much higher in this segment, leading investors with deep pockets to prefer luxury housing projects over other property assets for better capital appreciation in the long term. But there is now a visible trend of developers focusing on more affordable housing. For instance, VGN Developers has launched a residential project in Avadi in which a 600 square feet apartment carries a price tag of 17.3 lakhs. Another premium developer, Akshaya Homes, will be putting up 620 square feet apartments on the IT corridor of OMR at 20 lakhs apiece. And close to the automobile hub of Oragadam, Arun Excello Developers is offering each apartment at 17 lakhs.
Yeah, there is a huge potential and a huge market for affordable homes. Not only in Chennai and Mumbai, across the country, affordable homes is going to be a big market because almost about 90 to 95% of the demand is in that segment. I think this initiative at Avadi, where you have train access, the suburban train, is a great boon because these people have to travel to the city. So unless you have public and mass transport facilities, this is going to be difficult for the end user.
And affordable homes doesn't only mean smallish flats. Independent villas on a small plot of land have also been included in this category. For about 20 lakhs, you can also buy a standalone home with an exclusive terrace on the outskirts of the city.
Again, in the outskirts, the row housing is one, which are very compact homes, which do not occupy a lot of plot space. So those are also one possibility where the construction cost can be lower than in the case of multi-story buildings. In other countries like Mexico, Brazil, and Australia, these kind of homes are produced in large numbers. But again, the land cost is the key. If the land cost is more expensive, we need to increase the built-up area per square foot of land.
There are various segments. You have villas, you have plotted development, you have high-rises, you have affordable homes. It's a mix. And they are taking the homes to where the manufacturing hub is, where the telecom hub is, where the IT corridor is. So we're seeing the peripherals which are having large land parcels which were affordable at a particular time, having that unit today which is coming into the market. And I guess it's just a matter of time when you see lights and you see amenities and infrastructure growing. So it's a hand in hand altogether. Your infrastructure grows, your government makes the norms which are easier, and at the end of the day people prefer to go to that destination. So when the destination becomes preferred, automatically everything becomes affordable.
Experts say a robust home loan market catering to this category could help in taking the affordable housing sector to new heights. According to a report by John Lang LaSalle, the home loan market in India for the 3 to 10 lakh rupee housing segment is worth a staggering 11 lakh crore rupees.
There's a huge opportunity. If you really take a look at it, they can disperse more than 10 to 15 trillion rupees in terms of debt. But what happens is, for a bank to really service this sector, we're talking about high performance and high risk. and they don't want to have a non-performing asset at the end of the day. However, we encourage banks to look at that opportunity and make people, have a home at the end of the day. Because today Indians, all of us, aspire to have a home, and if it is affordable, that segment, we need to make that happen because that's the working class.
Even as real estate developers are expanding at Chennai's outskirts, it's not as if they've given up on opportunities in the city centre. They are decreasing prices, shrinking apartments in an effort to widen their customer base. So that's good news for Chennai's home buyers. In Chennai, Purnima Murli.
And while we're talking about affordable housing, HDFC Chairman Deepak Parekh has made a strong case for a single window clearance mechanism to facilitate approvals for such projects. And a few years after he warned of a real estate bubble because of inflated housing prices, Deepak Parekh says government and regulators should look at allowing banks and housing finance companies to fund land transactions. Sajid Mangat and Manasi Gilani get to the highlights of Parekh's pitch to shareholders.
Deepak Parekh is putting his weight behind opening up of the real estate and the housing sector. In his address to his shareholders, Parekh says the worst is behind and there is no need to look back. He also makes a pitch to the government and regulators on allowing banks and housing finance companies to finance land transactions. Parekh argues that if affordable housing has to become a reality, then financing restrictions should be eased for the housing sector. Parekh says when there is no real estate bubble, as is currently the case, then banks and housing finance companies should be allowed to fund land transactions. This is because in property transactions, land costs comprise almost 70 to 80% of the total cost. Parekh says the solution to quicker approvals for the housing sector lies in putting in place an online single window clearance mechanism for affordable housing projects. He says developers must provide affordable housing in the price range of 15 to 40 lakh, which may mean lower margins, but low-cost housing is a volume game. He also wants priority sector tag for lending to housing sector to be real estate. Parekh says the Reserve Bank of India would do well to recognize the priority sector housing loans up to 25 lakh in metropolitan cities and 15 lakh in other centres is unrealistic when inflationary and other cost escalations factors are considered. Priority sector housing loans should be increased to at least 40 lakh per unit. Parekh has questioned the need for multiple approvals and delay by developers to deliver homes and at the same time wants more accountability for state government and municipal authorities. In Mumbai with Sajid Mangal, Manasi Gilani.
And with that, we're totally out of time this week on Prime Property. Remember, you can always email us your feedback, send us your property queries and experiences with developers you may want to share. Our email address is primeproperty@network18online.com. You can also tweet me. This week, we leave you with images of residents of the infamous Campacola Society in Worli, Mumbai, protesting against eviction. While the Supreme Court had ordered eviction and demolition of the illegal 96 flats, the residents continue to question why the BMC has not chalked out an alternative solution as had been ruled by the Apex Court earlier. Goodbye. Thanks for watching.
We want justice! We want justice!
We will fight till the end, till the time we don't get our justice. Let them disconnect, let them use all the force and power we have. But sooner or later, the truth will prevail.
We are continuing our struggle, and I want every Mumbaiker and every Indian to come out in support for us.
We are law-abiding citizens. All we are asking for is something which is absolutely legal.